Hi, thanks for joining me again. Just a quick one today where I asked the question, is it a buying climax? I asked the question because there was a weekly chart this week, which I'll point out shortly, where that question could be valid. But firstly, we'll just go through what is a buying climax, how they develop, and when you can recognise them, because they can be a little tricky. This is Macquarie Group back in 2015 on the daily chart. Now, it's pretty obvious which bar we're looking at here. This is the bar, and this is the volume down here. Now, generally a buying climax are professional sellers selling for profit to the general market or to anyone who will buy. The news will usually be really favourable, and it will have been favourable period of news for some time as prices rise. There'll generally be a considerable up move in the background, so there's good profits available to be taken. The bar itself will often gap up from the previous close. It'll have a much wider spread than all the most recent bars. You can see the spread here. That's the traded range, and the actual spread goes to the previous close, which is the true range. The close itself will be mid to high. It can be very high, in which case you might see bars continue to try to go higher for a while because there's a lot of momentum in the market. That's what's caused all the buyers to come in and allowed the professionals to sell to them. But a mid-bar close, you'll often see a down bar in response, particularly on quite high volume as well, as they unload more of their stock. You'll often see the low of the original up bar being a significant level, which once broken is hard to recover. You can see prices came up towards the low, the true range low of the initial up bar, but weren't able to overcome any resistance here because anyone who bought in here was immediately, in this case, locked into a poor position, a weak position where they're holding a loss, unless they also got out the very next day and sold into this down bar, in which case they did a good job because it would have been hard to sell then after just buying the day before. A volume itself will either be high or very high. We'll look at another example. This is Wesfarmers on the daily chart. You can see once again, volume was only high, not very high in this case. There's a very large gap up from the previous close. In this case, price or momentum carried price higher for a little longer. Price tried to go up, but you can actually see that there was no interest by the professionals in supporting an up move. They're in there selling at the moment. So this was like true believers believing the news story, whatever it was that came out, or the ongoing news story that had been helping to build price for some time. They were still believing what was happening, where in true fact, the professionals were selling into the demand that had been created. You can see that started to come in here as prices continued down, and here's the true range low. You can probably say that this period across here was continual distribution or selling right through here. You see all these poorly closing bars. And when price broke down, and here's the breakdown bar, it's pretty obvious that one. It tried to hold on as best it could through here, but then price broke down on an increase in volume, and it wasn't able to recover for a period after that. And here's gold futures weekly chart. back in 2011. You can see this bar here, it's just the bar we're looking at. Volume was very high. There was a gap up from the previous close. Price closed in the middle, but the true believers were keeping it going. They thought after this huge up move that had been in place, it was just going to keep going no matter what. And you can see spread was still really good here, but the volume suggests that the professionals weren't supporting this up move. And then this bar here was very ominous, huge volume, closing in the middle. That was selling on that bar for sure. And then it tried to go higher again, but with no support, spread narrowed, volume was below average. A little bit more selling came in here. If we mark across there, you can see that price wasn't able to overcome the resistance that was caused on this huge high volume bar here. Is this a buying climax or the beginning of a buying climactic period? Quite often when these buying climaxes come in, a group sells to take profit themselves, but there's other groups still in the market, and at some point they will choose to sell too, and a domino effect can come in. You can see price gapped up from the previous close. The spread is very wide. The close was slightly off the week's high, but not excessively so. There's no doubt that some group or groups chose to take profits this week. The move has come from about 4,000. The spread this week was from about 18,000 to 24,000. So that's a very big spread. It's a very, very big spread. It's not normal, it's abnormal. And you can see here, a month back, there was some profit taking here, but the market was able to recover. Other groups weren't ready to sell for whatever reason, and they've kept price going higher. But now you've got another very wide spread, an abnormally wide spread. This is not normal trading. This is either over-enthusiasm or a buying climax or some form of climactic action that's about to develop. We'll just have to watch for a while and wait and see, but it's definitely ominous, and it's a little concern for anyone who's probably in the market. It may be that after a period of consolidation, price can recover again. It depends whether other groups also follow suit and choose to take profit at this point, and then they may look to reaccumulate later and rebuild the price. But right at this point, that looks like an ominous bar, an excessively wide spread, quite high volume. You've got previous weakness in the background with this bar here obviously having some sort of supply on it, but the market was able to recover at that point. This is the widest spread for quite a long time, an abnormally wide spread. So it's a market to watch, at least for a period of time now. You'll notice, or I've noticed, that there's been quite a bit of talk about Bitcoin in the mainstream media. And when news gets to the mainstream media outside of general financial circles, then there's a chance it's being pumped up by the professionals to try to get just anyone who's interested involved. They don't want to miss out on the potential rise. Even though the rise has already been and gone, you should have been in at 4,000 or 5,000. You should have ridden it up to this point. This is not when you should be buying. Anyway, I wanted to point this out and ask the question, and we'll just have to watch this. It's live. It's right at the right-hand edge of the chart, and just see how it develops over the next week or two or three. Thank you. See ya.